All right, fellow meme stockholders, XMAX Trading here. Just want to go over the latest DD and AMC. So if you haven't subscribed already, subscribe to the channel, hit the like button, leave a comment, and let's get started. So I found a really interesting article written by Frank Nez, who's a really good meme stock guy on the internet. So he's talking about how to force a short squeeze in AMC. This is written just today, June 20th. So I want to find out how can retail or other long institutions potentially trigger an AMC short squeeze. For over a year now, shareholders have been looking for a catalyst that would trigger an AMC short squeeze. But not just any short squeeze, the mother of all short squeezes, MOAS. While AMC managed to scare a few short sellers off last year when the price rose to 72, new investors are wondering when the next major run-up will occur. For this, we'll have to discuss with a look at what has caused AMC to surge in the past year. Let's discuss it. Looking back at 2021, it's important to look back at history, predict the future. Above all, is an AMC short squeeze even possible? The answer is, of course it is. We know by looking at AMC short interest data, which tells us how much of AMC's float is being shorted. Just like last year, AMC has a high short interest percentage of 22%. And some of you remember AMC dropped from 23 to 20% and then to 14% when the share price rose from $14 to its all-time high of 72. This is kind of weird, right? The price of short interest will get really high and all of a sudden it kind of drops and then boom, the price shoots up. AMC still has potential. Now imagine AMC short interest drops from 22 to 10 or even 5%. How high can AMC's share price go? That's the million-dollar question. But the short interest doesn't matter if the short squeeze isn't triggered. For months and months, retail hoped for a very specific catalyst that would bring riches to fruition. The truth is, it's always been up to retail what will cause an AMC squeeze. Now we have an understanding of AMC short interest means and how it plays a key role in short squeeze. Here's how shareholders can trigger it. Heavy buying pressure. It's no secret that heavy buying pressure triggered AMC to surge in price last year. Big daily volume of 300,000 to 700,000 forced the share price to move, creating a panic of short sellers to close their positions. Now, I mean, is it the buying pressure from retail? Is it buying pressure from gamma squeeze, right? Because the market, the ETFs have to buy up the stock, maybe for options plays. People are buying a lot of call options on AMC. I don't know. This results in a domino effect, fueling AMC share price to rise as more shorts followed suit. While many held unrealized losses, some were quick to cut their losses. The Ape community has bought and held AMC for over a year now, but it's fair to say the majority of retail investors have been simply holding. The proof is in daily volume, now trading below AMC's average of 52 million. Liquidity in the market tends to go down during the bear market, contrary to a bull market. It's the nature of the market. Stock drops and the majority of investors buy less. Stock goes up, majority of investors buy more. That's kind of typical emotional behavior. I used to speak heavy on volume several months before AMC ran to $72 per share. The truth is, the Ape community is accountable for triggering the AMC short squeeze, not the SEC, not a law, but investors. You can't take volume with a grain of salt. Bum, bum, bum. Unlike many catalysts that have surfaced over a year now, you can't take retail volume with a grain of salt because it is what it is. Some investors argue that volume does not matter due to how much of it is routed through outside the lit exchange. It's kind of true. But it mattered when AMC ran to 72, so why wouldn't it matter now? Heavy volume triggered AMC to run last year when millions of retail investors bought the stock en masse. I don't know about that. I think some of the lit orders, the buy orders are being routed to dark pools and dark exchanges, and all of a sudden, it gets delayed, and all of a sudden, I guess they piled up somehow. And the same applies today. AMC soared to $34 per share in March when its average volume had doubled during the run prior. In March, when its average volume had doubled during the run prior to getting halted. GameStop claimed $199 per share when the average volume had almost doubled the same trading day. If retail investors are to squeeze shorts from their positions, they have to play offense. Remember why AMC ran in the first place. I think retail's been buying the whole time in dribbles, right? It might be kind of nice to time this trading, but I think retail's been buying and holding the whole time. That's why Adam Aron said they've looked at the float 6 times. 6. Secret message. Not financial advice. So who knows? Guys, leave a comment in the section below. Let me know what you think about this. Can retail force a short squeeze? as Frank Nez says. I mean, how much do we got to buy? We got to buy a lot more, is that what we're being told? Yeah, so, interesting, and I'll see you guys in the next video. Bye.